Hey guys, welcome to today's session. I'm going to give everybody a moment to join and make sure that all of the links are sent out correctly. So if you can just bear with me for 2 minutes. Kenneth Lupus, how we doing, brother? Hope you're all good. What am I looking to do? Check the links. Thanks. For some reason, the links haven't been posting properly this week. How we doing, Rob? Hope you're all good, bro. Yeah, the links haven't been posting properly this week, and it's frustrating because nobody knows that we're going live. Yeah, I don't know. Super frustrating. You used to have a yo-yo. What? What are you on about, a yo-yo? I love yo-yos. Let me ping this link out. Get some people to share it. There we go. Welcome, guys. Welcome. Christ. There, because I said, okay. Yeah, I feel like mine's a yo-yo this week. I can't get anything off this week, and I think it's a thing I'm seeing across pretty much every algorithmic trader at the minute. Is we're all getting chopped up. A lot of kind of the algo guys who I look for, so obviously I've got myself, I've got Blaine, I've got loads of strategy quant guys, SYO, for example. Like the common theme has been January this year, was really solid. I think every algo trader slapped it up in January. And then pretty much everybody's, done their ass going into February. I mean, I say that it's not even that bad. I think I'm down 1% on the month so far, so it's nothing crazy. And we've still got 2 weeks of the month left yet. But I need a couple of good trades really to kind of get back to scratch. Mind you, we can't all be like Dr. Deanna Cole and just killing it month after month. She is. If you haven't checked out her record, I highly recommend doing so. She's probably the most consistent Darwin I've ever seen. So big shout out to Deanna. She's a lovely person, brilliant trader, has one of the most consistent records I've ever seen. She's down in February at the moment, but like I say, it's not over till the fat lady sings, as the saying goes. So she's got 2 months still, and hopefully she ends green for the month, because that is quite a streak. That is how many months is that? 12, 15, 16. So February is her 17th month at Darwinex 0, and she's been green every single month up until this point. So just phenomenal work for Deanna. And then big news for me, big news for XAQP is I think the index has landed today. I'm presuming it's the index because it's a pretty sizable chunk. So I was sat at $207,000 this morning. Now it's at $600,599 in investor capital. And that jump usually indicates an index investment. If you're not familiar with the index, it's Darwinex's master fund, where we allocate a load of our hedge fund capital to our big strategies, or some 200 of the best strategies on the Darwinex exchange. So it's kind of it's quite a big deal, especially for me working at Darwinex. It's a nice thing to be able to. That's just from Tail. He wishes. It's nice. I think I've mentioned this before, doing these sessions and being able to talk about topics and talk to you guys about trading. And that I'm cut from the same cloth as you guys. I'm not just some guy from corporate who's sent down to do some webinars, who doesn't have the foggiest about trading. It's like I actually understand how you guys perceive the markets. I understand how you perceive Darwinex because I'm also a client as well as a trader. So it's really nice that was kind of the last box I needed to tick off. I guess the last box is to get 12 months, which will be next month, 12 months record. Actually, technically it's in April because I didn't trade for a lot of April. Once I've got that, it's like my record is a year long at Darwinex. I'm in the index. I mean, DarwinIA Gold, and it's kind of great for me because, like I say, I don't feel like an imposter coming into these sessions, which I won't lie, like you know, last year, maybe the year before when I was doing these live streams, again, probably why it was a little bit more corporate, quote unquote, you know, when I used to do the presentations, it's very much matter of fact, this is that, this is this, etc., etc. Whereas now we can talk more markets and stuff. What's crazy is the euro dollar price. So I've got $600K in investor capital, but only 665,000 euros. Like, that's wild. I have 25 investors too. Yeah, I mean, that's pretty decent. I'm super lucky, right? And I am so aware of this fact. I'm super lucky that I'm live streaming 3 times a week to people in the Darwinex ecosystem. I also get the kind of credibility that I work for Darwinex. So when people are finding me on LinkedIn, I am associated with Darwinex. So I take on a lot of the brand image from, you know, a trust and kind of like, I guess trust is the perfect word, like a trust perspective. People trust me because they know I work for Darwinex. So it's a bit more of an easier decision to place money because you can see me, you know the person behind this record. So I am in a very, very privileged position, and I understand that. And, you know, I'm super, super grateful for that. And I'm grateful for every single 25 people who have invested into XAQP thus far. I mean, I actually, and this is a bit of a milestone for me personally. So this is less about Darwinex, I guess. That puts me above the $1 million AUM mark. So I do everything in dollars. So it was $160,000 USD to euro. No, let's go euro to USD. So I have 160K euros. And then I'm also trading an account for a fund in Netherlands. So I trade a strategy on behalf of them. It's XAQP with 500K euros. You can see that here. And it is a live account. I don't know if, I don't want to give away their information, so I'm not going to show it, but it's a live account. I don't really know how to show all history. So it started with 100,000 at the end of Jan, and then they increased it this week to 500K. I guess that shows it's a live account because you can't top up a demo. It's annoying that they've started this week when I've been having a crappy February. So we go 500 plus 500,000. So that's 660,000 euros, 660. And I think I got another $50,000 coming this week from another fund. Some guys I have a good relationship with. So it's 700 and goes 784,674 dollars plus 600,599 dollars. So that's 1.38 million. I mean, that kind of blows my mind. Like, even a month ago, right, I was trading like $100,000 live capital. We're not talking, you know, virtual capital, prop capital, all that sort of rubbish. I'm talking real investor capital. And I'm now managing $1.4 million, which is just absolutely insane to me. Like, I'm super, super grateful for, you know, the position that I'm in. So I apologize for making this session about me thus far, but, you know, I speak to you guys, you know, multiple times a week, and you share the highs and lows with me. And so, you know, it's it's one of those, I like taking you guys on board with everything that I experience and everything that I do. Is the index automatic? No, the index isn't automatic. So Darwinex Labs, which is headed up by Javi Kalan, the owner of Darwinex, and a couple of quant guys we have, they make a discretionary decision to allocate capital to a Darwin. So we have kind of like a systematic process where we will go through so many different factors. So we will look at the correlation with other Darwins, the correlation with the market, the strategy style, the capacity. There's so many different things. I shared this thing earlier. 2 seconds. I realized that I said 1.4 million in real investor capital, 160,000 euros of that, so about $200,000 is DarwinIA, just FYI. So the rest is real investor capital, apart from that. It's worthwhile watching. Where is it? I did do it on here, didn't I? It's in the live section, isn't it? Index. So this session here, I got to overtake Blaine now. Yeah, I've got now. Blaine manages a lot of capital personally, like from friends and family. I don't think, as far as I'm aware, I don't think he takes like performance fees. He manages it for like his parents and stuff. But Blaine is trading with a decent amount of cash. I'm not even in the headspace to overtake him right now. I'm still learning from that guy. Like it's great to have him as kind of like my right hand at Darwinex, because I get to learn so much from him. And you know, I would like to think him from me as well. I kind of opened Blaine's eyes to trading higher win rate systems and adding kind of like a diversification within your strategies in terms of like the win rate, the risk to reward, and all that sort of stuff. But back to what I was saying. So it's worthwhile watching this. It is an hour and 42 minutes long. It was a live stream that I did when we launched the index. So you don't have to watch a whole thing. You could just do something that I like to do, which is coming onto the YouTube video, clicking show transcript, and literally just copy and paste in this, put it into ChatGPT or Gemini or what have you, and ask it to give you a TLDR, which stands for too long, didn't read. And it will kind of lay out all the important points for you, and it will tell you exactly what was said in the session. Alternatively, there is chapters on it. So if you're interested in like one thing, because a lot of this is just me talking about why it's good for Darwinex, which I think at this point, everybody already knows. There's a massive bit about questions and AMAs and stuff like that. So, but the most important bit is here, how we choose our Darwins. So this, I go through this in a lot more detail. I'll make this full screen. So this classification goes from most important at the top of the list to least important at the bottom of the list. And when I say least important, I don't mean it's not important. All I mean is like it's lower down on kind of the importance, if you will. So the track record longevity is the #1 priority. Now with Darwinex Zero, it's kind of less important because you'd have to be into gold anyway, which means you're going to be over 8 months and have hit some performance objectives anyway. The main thing here is like you can look at the experience factor on Darwinex.com. I'll bring it up so you can see what I'm on about. Also, just as an FYI, guys, I am going to have to end this session like 10 minutes early today. I am joining Mentor Q for a session on Darwinex at 5 o'clock. So I need 5 minutes to get set up for that because it starts promptly at 5 p.m. UK time. So just as an FYI. So experience over here. What this does is it measures time plus the amount of trades that you take to give you kind of like a trading period, so which is called a D period. So you can see each D period is kind of different based on my rotation. I have tapped into, is it not 10.64? So basically like they've almost got a year's worth of data on me essentially. So I've got an 8.8 score out of 10. I already know the mechanics of that, to be honest. I just know how it works. I don't know why it works. But that's a good way of us saying like you might have a year's long worth of record, but you might have only taken 5 trades, and therefore we can't accurately say, well, for the next 5 years, this guy is going to perform in the same way, or girl is going to perform in the same way that they have now because we've only got 5 trades. Canis Lupus, late in, early out, doesn't show much dedication. I mean, yeah, I have to agree. I can only apologize. Although I am here 3 times a week, live streaming to you guys. I kind of, I really miss, so like last week when I was down in London on, was it Thursday? I was down in London. And then Wednesday, I was recording an interview for Market Masters. I really missed not doing the live streams. Like I think what I love about doing the live streams is I can come on and forget about everything else. Now, I know it seems weird because like you're coming on, and at the minute I think there's almost 300 people in the session right now. So welcome to everybody who's here at the minute watching live. But it's like I put everything else to the back of my mind. So any emails I was worried about, any like client follow-ups I had to think about, or anything that I've got to think about with the team, kind of gets on pause for an hour while I focus solely on you guys. And you know, the topic of the stream for the day, which I really like because it allows me to kind of escape my own head for an hour. And when I don't get that, especially if I'm not well. So there's been like times in the past where I've not been well or I've been away for like the week. It's I find I really struggle. I like having these sessions. It gives me a bit of routine. Anyway, enough about that. So yeah, we measure the experience. So that's number one importance, the track record longevity. Of course, if we've got 10 years worth of data on you, we know more accurately what you're going to do for the next 10 years worth of data. Whereas if we've got 6 months, then we can't really say. Loss aversion profile, how well do you avoid big losses? Now, we don't have granular data, or we don't look at granular data like, does this trader place their stops? But it is like, we take a look at your loss aversion profile, which looks at your maximum adverse excursions, your maximum favorable excursions, and basically looks for, does this trader trade with positive asymmetry? Do they let winners run? Do they cut losers short? Or, are they kind of throwing something to the wall and hoping it sticks and, not really managing their risk? That's second most important. Then number 3, trend orientation. Does the trader follow the trend, against the trend, or are they market neutral? So for example, do you only make money when the S&P goes up? I'm going to turn my light on as well. 2 seconds, guys. Do you make money when the market is moving in a specific direction? If the answer is yes on that, it's kind of like, well, I'm trying to say this without being offensive. So there's 1,000,001 different ways to make money when the market is going up, right? So why you? Now, when you're delta neutral and you're kind of like, when your curve is independent to a market cycle, let's say, is probably the best way to say it, is like you aren't reliant on specific conditions as much. So for example, a recent example of this is the rally in metals. So as metals are going up, of course, we see a lot of traders are making money in that time. Just say it. No, I can't. I've got to be politically correct. It's kind of like the more neutral you can be to the broader market and the broader sort of trend, the more flexible the more flexible you become as part of a portfolio. Because if you're trend following and you only make money when metals make money or when indices make money, that might be 50% of the time. But we would have to hedge you out the other 50% of the time. We would have to find traders who do the complete opposite to you so that we find that delta neutrality. Whereas if you're delta neutral in yourself, then it's a lot easier to fit you into a part of a robust portfolio. Just checking the markets because I can see crypto's turning red, which is music to my ears. Let's hope we get an end of week dump tomorrow. I got some real juicy levels that I'm ready to load up on. I'm really excited for that. Again, I'm all over the place today. I'm like talking about one thing, then the other, blah, blah, blah. Then the next one, key asset class correlation exposure. I guess this is kind of what we've just been talking about, but more in terms of like specific assets. So how correlated is your track record to gold specifically? The reason we measure this is because we will only allocate a certain amount of capital to that grouping of traders. So if we have a lot of traders who have such a high positive correlation to gold, then we measure your value at risk as a group and as an individual so that we're not overexposed as a fund to that one specific asset. Then strategy, discipline, and consistency. So there's a few different metrics that the team would look at here. This is starting to get a little bit less important now, but it's still important in terms of it's one of the things that the team look at. So things like your duration consistency, are your trades all following the same sort of pattern? Now, for somebody like me, there's very little consistency in what I do because I trade 30 strategies. Well, it's 31 as of today. I have 31 strategies trading live in my portfolio. So yeah, there's not going to be consistency on every single position. Some trades might be held for longer. Some trades might trade with a little less size than others. So, but that pattern is consistent, if that makes sense. So it's not like there's just one random massive trade all the time. It's like it's all spread, but consistently spread. Then strategy execution type. Is the trader an algorithmic trader? Do they trade with a discretionary approach or are they mixed? I don't really know the crux of that. I think algorithmic multi-strat traders, due to the higher capacity, are kind of favored in terms of like, not favored as in we prefer those to manual traders, but it's easier to allocate to them because you generally have higher capacity, more consistency, and so on and so forth. But again, this is getting lower down on the priority list. Index drawdown correlation is kind of an important one. I'm surprised it's so low down. So obviously we have the portfolio, which is the index, and we measure your drawdowns compared to the index, because the last thing that we want to do is add a strategy just for the sake of adding a strategy to the index. Whereas if we can add a strategy where the drawdowns are uncorrelated, meaning when the index goes through a bad patch, you know, this trader might have a really good run historically throughout that same time period, then we're hedging out the drawdown on the index, meaning we're getting a more balanced multi-strat approach, meaning that we're covering kind of more base. Then the last one is risk management stability. So measuring your value at risk and seeing how stable that is. I've actually noticed recently, so they're the factors that get evaluated. Going back to the original question of being included in the index. I noticed recently my Darwin risk has been increasing quite a bit, which I'm not a massive fan of, to be completely honest. It's just because February has been such a slow month in terms of I haven't had many trades. But I haven't even looked at my VAR. My VAR must be dropping. It's probably because I switched off gold for a couple of weeks. Interesting. My VAR's not even really moving. Strange. Okay, maybe my target risk has increased. I think that might have increased a bit. This is where we look for the loss aversion. Just FYI, this is the loss aversion chart. So you can see there's no consistency on a trade-by-trade basis, again, as I was saying, because I trade so many different strategies. However, there is some consistency. I got screwed on a silver trade over here, I think it was. It wasn't a silver trade. I don't know. But my stop outs are all relatively similar, and so are all my targets, even though there's a bit of difference between certain strategies. Which is one of the things that we assess you on. If this is like really erratic, then that sometimes tells us that the trader either martingales, doesn't trade with stops, or just kind of like, you know, throws SHIT at a wall and hopes it sticks. But yeah, that was how the index allocates capital to you. It's worthwhile watching the video. In fact, let's do my favorite index. Let's do my favorite task. Exactly what I actually no, we won't bother. I've already explained it. I was gonna copy and paste it and put it into ChatGPT or Gemini or something like that. I'm getting absolutely slaughtered at the minute on a dollar yen position, unfortunately. Yeah, ended up here. It's one of them trades. It's just like, yeah, it is what it is. It's quick and pain free, really, rather than just grinding around and then eventually hitting stop. It's the first time. It's the first trade that this system has taken since I've put it live. It's just typical. February has just been a tough month for me. But yeah, kind of is what it is. But yeah. I guess how long have we got? 20 minutes. I'll probably do a quick Darwin review, unless you'd rather. I don't mind going through some building stuff. I was trying to put something together earlier. I was trying to put together a system to trade indices. We're going to use 100. Let's try the S&P. I much prefer the S&P at the minute. So the idea of my system was to try and catch, to the long side only, to try and catch this sort of move. So what I'm thinking, or my initial thoughts, and it didn't really look great at first glance, but I think there's something in it. is if price is below opening price for the day at like 2 p.m. or 12 p.m., so somewhere around here, then we set a buy limit. I originally put it on the opening price for the day, but I think maybe like 2 or 3 candles back, set a buy stop, sorry, to then buy the breakout of that with like the stop. I'm not a fan of using like candle-based stops, something like that, and then close it on the same day, like a specific time, something like this. So I'm trying to think of how, because the way I had it before, when you buy the breakout of the open price, it wasn't very reliable. So if I'm using Perfectus here, Perfectus AI is owned by Darwin PYE. It's the same as FX Dreamer, a little bit more modern. There's some different quirks, different things that you can do on it to FX Dreamer. It doesn't have all of FX Dreamer's functionalities, but it does have some different stuff as well. So it's kind of, you can use one or the other, or you can use both. I'm using both. So if we go run at time, and then we go server time, I'd like to run it at, let's go 1 o'clock. So we'll do 3 o'clock on here because the server time on Darwinex is 2 hours ahead. So start at 3 and then set buy pending order. So we're going to link all these up. Run at time. So we need a trading rule. So if the ask price is less than the candle open for today, go on the daily time frame. Don't want any offsets on there. Okay, so this trade rule basically says if the ask price is lower than the daily opening price, what I'm going to try and do here, which I didn't do earlier when I was testing this initially, is I think maybe let's add another, oops. Add another, that looks gross. Let's add, ask price is greater than, yeah. The ask price is greater than moving average. Let's create an input here. So we're creating a variable, moving average, period, go 50. The reason I'm creating a variable is so that I can test different inputs on MetaTrader when I'm doing my testing. Whoops. So we go moving average period. Let's change it to a simple moving average time frame. M15. Should do it on the M15. Yeah, let's do it on the M15. Okay, so run at time 3 p.m. We'll run it on the M15. The count trades is less than or equal to 0. Is less than or equal to 0. Check spread. We'll create a new input here. So we'll go spread filter. Let's say I want it to be 15 points. We'll change that to the filter. So we're not going to get screwed on spread. Then buy pending order. We'll set custom price, market property. So let's go the past start candle 0, which is the current candle. Let's set this as an input so we can test different periods. Candle look back. Let's go 3. So it'll set a pending order to buy on the highest price for the 3 previous candles, or to get price value. Candle look back, price offset. We don't want any price offset. Okay. Time frame 15 minute. Okay. So we've got that set. Money management. Again, I'm going to create an input here. So risk percentage, we just go 0.1. I like to keep risk low and add it to the portfolio. Stop loss and take profit. So let's add some more inputs again. So let's just go 0.5%, and then TP will use it as a multiplier. So we'll do 200. So it's 2 to 1 risk to reward. So we'll go stop loss TP. Okay. Okay. And then what we need to do is run at time, delete orders. So delete orders once per day at 9 p.m. No, let's do it a little bit earlier. 8 p.m. We'll remove orders. Okay, do we need to add anything else right now? I think we do. Indices, break it out. Yeah, let's try this. Let's see if this works. I don't know. And the whole thing is that, you know, Blaine and I have spoken about this a lot recently, is like, you don't know whether an idea is going to be, whether it's going to be worthwhile or whether it's going to be profitable until you've tested it. So it's all well and good, you know, I have this great idea, I want to do this, I want to do that. You never know whether it's going to be profitable or make money until you've tested it. And even then, once you've tested it, you don't know if it's actually going to be profitable until you've ran it live. So let's try and set this test up, and then I'll come back to your question, Rob, and we'll take a look. Where is it? As you say, there's indices breakout. That's the one. NASDAQ, M15. Oh, let's run it on the data actually. Okay. Yeah, let's see. Maybe it's awful. I don't know. Rob, why is my risk going higher still? I risk low still and trade less, but it's spiked this month. Are you on about your risk multiplier? I presume you're on about your multiplier. These lines in the background doing my head. Or you're on about your, okay, looking at this, I'm presuming that you're on about your VAR increasing. It might be, you've turned your things off. It might be your trade duration. So as you know, the different factors that affect your value at risk is your position sizing, of course. Yeah, your VAR. Your position sizing, of course, your trade frequency, your trade duration, and the assets that you trade. From looking at this, you're holding trades a lot less, which actually makes sense. Like, and I don't mean this to come across in the wrong way, Rob. Obviously, for other people's sake of this, I know Rob very well, and you know we're good friends, so I feel like I can talk to him in a certain way. But the thing I get from you, Rob, over the past couple of months is that you, ever since December, you've been kind of scared to run trades the way that you used to, and it's clear from here. Like if we look at your maximum favorable excursion over here and your maximum adverse excursion, like it's a thing of beauty. And then the longer your record's gone on, the less it looks like that. This to me looks like you're scalping or cutting trades at break. Like not just the favorable excursion, but your adverse excursion has changed massively, which tells me the way that you're trading now, even though you might not feel like you are, you're doing something completely different to what you used to do. It's like clear as day when we're looking at this, and your VAR kind of reflects that, in my opinion. So even though you might be risking low, like you're cutting trades quickly. I don't know if you've gone from swinging to scalping, but like you were letting trades run over here, and then you're not doing that anymore. That can have an effect on your value at risk, as just as an FYI. Context creator block not defined for block with index 7. No idea what that means. No idea what that means. It's 10 p.m. every night. Context creator block not defined for block with index 7. Maybe it's because I'm trying to run it on the daily. Let's drop it down to 15. Still swing trading, but bad months. Cheers, man. Makes sense. Yeah. Okay. If you're still swing trading, I would say if you haven't changed your position sizing, a lot of it could be due to the volatility of the assets that you're trading. But I still stand by. It's clear in your excursion chart that your behavior is slightly different, so whether it's your frequency or your duration. One of the two has changed, and that with the fact that I'm not sure what you trade 100%. I think you trade a few assets, but like yen pairs, metals, they've all, like the volatility of those has all increased significantly recently, which will all affect your value at risk as well. I bet Typhoon is loving life at the minute. MicroStrategy down again today, down 3.3%. Yeah, this is stunning stuff. I mean, I hate to see it, but I also love to see it. Like to me, I think this is the opportunity. I want to be in here. This is Bitcoin specifically. Between this area, like, yeah, I would love to be in. Between this area, I'm like, hell yeah. Basically, you know, any liquid cash that I have will be going towards crypto and potentially equities if they keep tanking as well. Anything below here, I'm like all in. If we break this level, if we break down here on crypto, then that's a conversation you have to have with yourself where you go, okay, is it over? Is it going to recover from 15K all the way up back up to, you know, $100,000 and then $1 million? I just don't know. I don't know. But that's the conversation I'll be having with myself. But yeah, getting into multiple positions along the way, just DCAing in. I did start, as I said I would, at 74.5. We are lower than that now. So it's time to, I get some performance fees. What I can see happening, I think I've got about $3,000, maybe slightly less in performance fees from XAQP coming at the start of next month. What I can see happening, a massive dump going into this month, and then it'll rally like this into like when I get my fees. So if we come down here, I'll just take money out of one of my other accounts and I'll pay it back from the performance fees. Ethereum is really interesting to me as well. I like this level. I think if we start trading below this level and accepting below there, it's a concerning sign. But everything else on Ethereum points to more upside, or at least long term. So I'm happy to take a bid there. And then altcoins, I mean, I guess we'll wait and see. Ripple. Oh, it's my answers for my IMC mock quiz. Ripple, 94 cents, looks great. Solana, hate to say, but $48. Yeah, it looks great. Even down here at $30, looks unreal. BNB, I mean, I wouldn't touch BNB at the minute when there's other alts that are way down low, but $400 is a bit of a nice area. And you'll notice here, I'm just looking for key levels. Like, I'm literally just looking for key levels. That's all. Things like Doge, I would never touch out of principle. Cardano as well. I bought Cardano. I was buying ADA at like a fraction of a penny. So it was like 0.008, I think was my first entry. And I was selling it all above $3 or around $3. So like, because of that, I literally rode from like, before this chart even started, because it was 2016, I was buying ADA, or 2017, one of the two, all the way to the top. I would never touch it again. Just out of principle, I wouldn't go back there. It's like going back to an ex-missus. You just don't do. A lot of the others, like AVAX, I rode AVAX hard back in the day, up to like $100. But it's like, is it a dead chain now? Like, I wouldn't go back once it's had this kind of run, unless it's like one of the big 2 or 3. I would just stay away. Like Litecoin, right? Litecoin was massive when I first started in 2017, 2016. It peaked again in 2021 at like $400 a coin. That's 52. Is it ever going to get back up there? Who knows? Probably not. Correct me if I'm wrong, but I think the Litecoin developers basically abandoned the project. I think people still work on it, but nowhere near as many people as there needs to be, sort of thing. Tron. If you don't know anything about Tron, do some research. It was back in the day when I used to do DeFi stuff back in like 2020. The Tron blockchain was one of the hardest things that you had to deal with. I hated it. Absolutely hated it. It's run by a guy called Justin Sun. Do a bit of research into Justin Sun from Tron. You'll be amazed at what you find. But yeah, I'm looking at some nice things. Okay, so the test is running, but it's taking its time. Something's not working. Oh, look at that. 2019, NASDAQ at 7,699. Context creator block not defined. I'm gonna have to Google what that means. But it's like every day at 10 p.m. Oh no. That's an issue. Let's try that. Maybe that's what was causing it to not work, potentially. I'd set the spread filter to only allow trades above the spread, not below the spread, which is an issue. MQ5 experts, advisors, testing. Okay, let's try that. One last test. Rob, if you keep building algos, get learning tons of code, next you'll be building the XAQP coin. Let me know. I'll definitely invest when I get my so, funny story. I've actually launched quite a few crypto projects in my time. Oh god, quite a few. So I used to consult for different DeFi projects. I also launched a couple of my own projects back in the day. Like we're talking 3-4 years ago. I launched my own. We raised like 150 grand in the pre-sale and we went live. That did well for a period of time. Then we started going into staking and NFTs. We brought on a real high quality graphic designer, and he built some NFTs. Let me see if I still got them somewhere. I'll see if I still got them on my PC. We also, with that, we sent a lot of money when the war first started off between Ukraine and Russia. We donated a lot of the profits that we made in that project to Ukraine. That was like the very early, because the war started whilst we were mid-project. Where is it? Old stuff. Here we go. NFTs. Martians. Oh, I haven't got all of them, I don't think. Interstellar. I haven't got all of them, but I've got a few. So these were some of the NFTs. Oh, I'll sort the size. These were some of the NFTs that we had built. It was all about space and aliens, as silly as it sounds. But we had these NFTs designed by this like real top quality graphic designer, and I loved them. Like the black aliens were the best, but we had like blue, we had green, we had purple, and basically all had like different designs. I'll have to see if I've got them somewhere, because like they were wicked. But of course, as with like every sort of crypto project, things wane off, and you know, kind of ends up dying out, I guess. But that was a lot of fun. I was also a part of some stuff on AVAX. What else did we do? I can't remember. It's been such a long time now. The early BNB, early Binance Smart Chain days, we launched a couple of projects on there as well. Like there was one called Planks. There was another one. I was part of one called. It wasn't me who came up with the name, so don't kill me for it. It was like Crypto with Heart, and basically we built it for charity. And any money that project made, the money went straight to where was it? It wasn't Thailand. Maybe it was in Thailand. I can't remember. Maybe it was Thailand. There was basically this town. We knew this guy. This guy was called Shane, and he was out there doing a load of work for charity. And there'd basically been this like tsunami or flood or whatever it may have been, and it wiped out this whole village. And they were rebuilding all the infrastructure for the town, and they were having to like put the houses on stilts. So we built that project to basically raise capital and send it to them, or at least from like the profit / the fees. So it wasn't like anything for us to make money from. It was more to like the investors to make money, or like the traders to make money, and then any fees that we earned as a project would go and fund the rebuilding of this village. But again, pardon me, DeFi projects like that, they only last so long. Yeah, I forget about how much like I've really done. Here's some bonds that we used to do. So we used to offer like bonds for the token, and then we'd like pay them out down the line. Like, guys, long time ago. Yeah. Now I built my own trading exchange actually. I got a picture of it anyway. I don't know. Doesn't look like I do. I don't know. Yeah, interesting stuff. I have a fun history. I've done quite a lot of things, but nothing's ever stuck with me the way trading has, and especially algo trading. But yeah, so walk down memory lane with me. That's why I love crypto so much, is because back in the day I was be opening a broker. I would never open a broker. Brokers are, with the exception of Darwinex, and I'm sure a few others. Okay, I'm not going to slander every single broker. I'm mainly targeting unregulated brokers here. It's such a predatory business where you're basically paying people thousands of dollars to go and bring you clients that you know will lose all their money. And you make the money back because you B-book these traders and you basically take the other side of their trades. Like, it's so predatory. Now, obviously, if you're a regulated broker, there's different things that you have to put in place to prove that you're not. So you have to have a different license if you're B booking clients, A booking clients, or internalizing your flow. There's 3 different licenses. And we have a license to A book our clients. We don't, at Darwinex, we don't gamble. We don't bet against any of our traders, i.e. we don't take the other side of traders' positions. We just don't do. We never have, we never will. Now, that hurts as a broker because you don't make anywhere near as much money, which is why we have the index and the asset management side of things, because we don't make money from traders' losses. So we have to align ourselves and make money from traders' gains. Which is a lot more difficult to do, right? So I never would open a broker, to put it shortly. But yeah, anyway, guys, it's now 5 minutes to, and I'm joining Mentor Q's session in 5 minutes. So I'm going to have to call it an end to the session here. today's been a pretty chilled one. I've just been rambling on for the past hour. So I appreciate you all for joining me. Appreciate you all, as always, for putting comments in the YouTube chat box. I will be back on Tuesday. I think I then am down in London on Wednesday, so maybe you'll have playing to yourselves on Wednesday. But we're back at Tuesday, 5 p.m. time. 5 p.m. UK time. I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. And I will see you in the next one. Have a great weekend, folks.